Guys, how are you? Happy Monday, wonderful week to everyone. The last week of October, Halloween, and a new start of new week of November. Please give it okay if you can hear me, if you can see the screen. Just drop me some yes or okay in the chat. Perfecto. Thank you very much. Wow, we have a great attendance today from the Latin countries. South America, you guys rock today. I see on the list all around. Is it a good evening time for you now, or what's the time now in Brazil, Chile, Venezuela, Colombia? Wow, we are everywhere here. Perfecto, perfecto. 3 p.m. Ecuador. So we are sharing the time zone, huh? Okay. All right. So guys, let's begin. Wonderful, once again, wonderful week to all, and welcome to all of those of you who watch us for the first time. A few notes before we begin. Basically, two main things. Inside the members area, please make sure to watch the video tour so you understand how to use this wonderful members area in your favor. Okay, where you can find everything you need inside the members area. This is the trading report, the one that you receive a bit after the live trading room, and here you have a video explaining how to use the report. Make sure to watch that. That's the list of the most important webinars to understand the terms we are using in our trading, in the live trading, and in the chat, Telegram chats. That's the watch list of our position. So basically what you have to do, just click the image, okay, and it will open it for you in a new window, explaining the structure and the current market conditions we are working with. Okay, so basically, once again, just click, and that's pretty much it. Below, you would find it's also separated by subject, as you can see. Below, you would find the comment and the explanation a bit deeper of every single instrument. One important thing I want to say, instruments that are not included here, like cryptos, for example, or some of the commodities, that's not because of the technical issue with the uploading unrecognized instruments in some brokers. So basically you will find them here. So for example, crypto, you would find the section right here in the description. Okay, we also have one of the commodities, sugar, which is not in the table, so I included right here for you. Okay, so basically just go click on the image and you would understand all the things that you need. Okay, basically the report is a summary to the live trading room. So according to your availability, just try to watch at least it highlights what we discuss here. So let's begin. We have a big list of instruments to start the week with. Just put it right here. Let's start. So as always, we start with the European pairs. We have 4 of them today. Let's start. Euro versus the dollar, the main one and the first one. So what do we have with this pair and what's our plan? According to the weekly time frame, we are in triple descending cycle, rounding bottom, bullish divergence. Our expectations, corrective cycle to the upside. This corrective cycle should be built on the daily time frame. So the daily had a first leg rally here. We expect this and that to happen. Likely that after that we would see some kind of correction and future move to continue. Until it happens, and as long as the last low is holding, we are after the buys. As simple as that. The first momentumal structure here creates trending conditions of higher highs, higher lows. Our plan retraces and buys. The pair is building up a bullish divergence already. The pair is creating in a beautiful ABCD structure, therefore break above the trend line, and we expect further continuation. Okay, now comes the question always, can we buy here, or do we have to wait for the trendline breakout, right? It's a very, very, very logical question here. Sorry. So the answer here is very simple. It all depends according to what cycle you work with. If you work with the weekly cycle, as we started, right, then the verification and the trading part should be on maximum 2 lower time frames than the original cycle. So if the original cycle is weekly, verification is daily, 4 hour is the lowest time frame we can allow to trade. And we need a setup here. Setup is anything that has to do with technical analysis. Trendline breakout is a setup. False breakout and higher highs breakouts, it's a setup. Pattern and breakout, it's a setup, right? Higher highs, higher lows, it's a setup, for example. All the rest could be done as well, like specific systems or strategies or whatever it is. Also, every single approach of this has its own rules. Okay? What to do if we just want to trade the levels? Like we have a level, Fibonacci retrace, divergence sticks. What to do in that case? Because we can't protect a low just to assume it's going to be a low. In that case, always very important to remember the bigger picture. If you trade levels, you want to protect specific zones, like rising trend lines, like Fibonacci retraces levels. You don't want the correction to go below a certain level, right? And so on and so on. It's very, very important to remember. And the main thing is that if you got your correction in two-wave structure, or even if it's one-wave structure, you want to make sure that on the lower time frame, you start to rally in trending conditions first of all. By saying that, that means you want to see bullish trend beginning. Okay, and then you can, on the lower time frame, to try and to squeeze lower, as we call it, right? Squeeze lower and find your setup. So yes, it's doable, but also it means it's riskier for one reason. You are trying to guess where the correction is going to end. You are not relying on setup for continuation like falling trend and breakout. You are trying to guess where the low will end, right? And that's the big difference. Trading without setup, but only with a level, comes with a bit bigger risk. It doesn't mean it's bad to be done, but it has to be done correctly. Okay? Just a candle pattern without anything else, it's not a setup. Okay? Very, very important thing to understand. That's what a lot of traders do. They just try to guess where will the correction over. There's no problem with that. Just do it properly. If you are for bullish trend, wait for bullish trend conditions. That means bullish structures. Higher highs, higher lows is a bullish structure, for example. Okay, so these things, it's very important to understand, and that's for the euro dollar. But since we are working here, well, I'm working here, we're weekly and daily cycle, weekly cycle with daily verification, sorry, the 4-hour chart trend line breakout is the one thing I want to say. Break above that, we should be exposed for continuation. Next one on the list is the Rafael. You are very welcome, my friend. You are very welcome. Euro versus the Kiwi is our next one on the list. Let's start with what do we have on this pair? Triple descending cycle on a daily time frame. Hints of a corrective cycle to come in play. Corrective cycle could be 2 waves. Corrective cycle could be a range. That means anything like that, or pattern, right? Or one more false breakout and then play inside. However, we have a triple cycle, triple descending cycle, 2 false breakout and divergence in play, and that means we are after as just said, corrective cycle. So assuming this is the first leg that came in play from the daily, it has to have a structure on the 4-hour chart, and it does. Okay. And right now, what we want to see in order to go back to bearish view is the break of this corrective mode. Okay. Break below that should open the doors for further continuation. And this is how we plan to work with the euro versus the kiwi. Now, what about the invalidation here? This is a bit more problematic because range, as we just said, is acceptable. That means we can rally even to the top of it, or even one more false breakout. That's still within normal zones of a possible range moves. Does it change the plan? No. The only thing it can change is if we continue to rally to the top of the range, then this trend line will continue to rally. That's the only thing we would see differently. And from there, we would want to, again, to start and turn bearish. And that's pretty much it. But the view of the cycle remains the same. Could this is discussion from previous week, could these rallies be traded? Of course. Of course they could. Since this became a structure with a bullish divergence by itself, we can look for the trending setups on the lower time frame. One of them is the break of the trend line and the creation of the higher highs. So we have a false break, a trend line breakout, and higher highs. Then on the lower time frame, it's verified as a trending structure. And basically, buy retraces come in play. Okay, so it's always it's important to remember, could the short term be traded against the long term? Yes, if you get the confirmations for that, right? Like trend changing structures, then it could be done. Ahmed, that's a good question you asked. Could divergence with candle pattern be a setup? Divergence by itself, it's only a sign that a stoppage, temporary stoppage, a temporary reversal, or just a beginning of deeper correction could begin. That's all. Divergence by itself, it's not a setup. Divergence with candle on a certain level, especially when it comes with fall breakout, could be a setup, yes, but they would be more aggressive because divergence does not create trend change. It hints something happens. Higher highs, higher lows, it's a trending structure. Divergence, it's not a trending structure. It's just a say from the market there is a difference between the supply and the demand for whatever the instrument is, and things could soon change. And that's all. As amazing the divergence is, divergence by itself means nothing. Exactly like support and resistance by itself mean nothing. Exactly like Fibonacci 50 by itself means nothing. Or channel, or Elliott wave, or whatever it is. Just something that found on the chart means nothing. And it's important to. It's a great question you ask, guys. It's a very, very good questions you ask, and it's important to understand that always. Okay. Great, let's continue. So Euro Kiwi break below this trend line, and we are expecting a trend continuation. Next one, Euro versus the Aussie, another pair we are bearish since the previous week. What do we have here? Triple cycle from the weekly time frame, expectations of two waves correction or any sort of a range. We can still continue to move inside the channel or start two waves. But the last bearish the last pressure here is bearish divergence. Apologize. No, my pen is bad. Here, bearish divergence. Daily fits in with a bearish divergence by itself. Break below rising trend line. And the 4-hour chart basically was the place where we became bearish after the break of this rising trend line. Previous week plan was sell retraces, and here is what we got. This was the first leg. This is the second. This is the correction. Our plan was look for the sells. Now, if that's the first leg and that's the correction, they must be cycle structure on the lower time frame. Let's go to the lower time frame, and that's what we have here. Right? We can draw here anything we like, basically. This way or expanded. Everything fits in here. We do have lower highs, lower lows, so everything would represent pretty much the same in that case. And then we got double wave pullback with a bearish hidden divergence, hints for a trend continuation. And break below the trend line, which happened previous week. And here we are. So the pair is going and still going, nothing changes. Our view remains bearish. One thing we do have to pay attention to, it's a possibility in that case, yes, of a contradiction between this short term and the longer term. What does this contradiction look like? This is 3 higher highs, 3 higher lows. If that's set up a bullish setup here, that would be a good place to do what? Partial cash out. Why? Because this is a bullish structure and it comes as opposed to higher time frame expected direction. Okay, very, very important. So we are going to play here conservative, and we say as long as this falling trend line that potentially starts a bearish trend, as long as it holds, we are bearish. But if it will be broken to the upside, it would basically activate this triple double structure, and that would be a red bulb to the bearish call here. Now, can we know in advance what exactly is going to happen? Of course not, and that's why I always repeat it. And I'm sorry if I am annoying with repeating that, but always trade facts. By saying that, when we start a trade, we always dream big. Oh, now I'm going to catch some big fish, right? Now I'm going to make some pips. We always start with great expectation, with great vision, with great wish, right? But we never can know in advance how the market will decide to go. And why do I say that? Because one of the popular mistakes we as traders do is we close the eyes to the reality and we basically trade wishes. The market doesn't care of the lines we draw. The market doesn't care of lines I draw or anyone else draw. The market will do what the market will want to do. So if I just trade my lines, nothing good will happen. Trade facts. And the market is the only one who will tell you these facts. All we can do as traders is preparation, is to try to trade these facts and try to ride them, work with them, right? If the facts change, we have to change. You know, when we go outside when we plan to go outside to play soccer, for example, and it's forecasted to have a great weather, but for whatever the reason, especially in Canada, the weather changes every single 10 minutes. The forecast changes. And suddenly it becomes raining, so we have to change the plans, right? So, oh yeah, Tibor, totally, I agree with you. It's good to remember these things. It's required to remember these things. Anyway, so the Euro Aussie, long story short, we're bearish, but with obvious invalidation, the falling trend line, because if it breaks up with a bullish divergence, we do not want to be in a place where we have contradiction between the lower time frame to the higher time frame. We better step back, see how the price behave, what the market plans to do, and act accordingly. We can always go back to bearish if the market will return bearish later on, right? Ahmed, can daily be called head and shoulders? Let's check. Which one do you refer? The small one or the big one? This one or the bigger one? I assume the question is about the bigger one. the big one. Well, it's a question that best to ask a master like Peter, for example, in the Telegram group. Patterns, it's his field. From my point of view, the answer is yes, because this is fit in exhaustion definition. From my point of view, it's really having a hard time to get the up move, but your neckline is so far away. So let's say we will wish to get all this move down to it, right? But yes, from my point of view, the head and shoulders fits the definition. It would be good if you can ask him as well, so just to get better answer. Next one, euro. Where is my euros? Here, euro pound. So what do we have with this pair? Triple cycle from the weekly, actually also kind of from the monthly directly. Extreme divergence, bounce. We expect a trend continuation. Daily chart started the structure. 1, 2, no divergence. Against, nowhere. The plan, sell the rallies. So we want to go lower and find these setups. The 4-hour chart gave us the bearish structure. And that's the idea from here is sell the rallies. That could be in 2 waves and sell. That could be in annoying range, and it's super annoying because everything is stuck in one candle yet, right? It could be continue in the range, for example, and then sell the rallies. But our direction is rallies, sell. Bearish view. As per the targets, we have to set the expansion. And the next cycle level is here. So there is room to work with in the bearish direction. Not much to add on the euro pound as for now. It was zigzagging pretty ugly since the previous week. All stuck in one candle range. Not the favorite structure, but it is what it is. Sometimes the market does that. All we can do is just to try to join the bigger picture. In our case, the bearish direction. That's why sell the rallies is the correct plan here. And that's from the euros. Now there are a few more euros which are still trending pretty well, like the euro yen, which also is expected to continue higher according to the weekly cycle, and the euro franc, but we don't want to overexpose to one currency. Okay, and we anyway have a lot of the euros here, so go with more, no, not required. For all those of you who are interested to follow my personal view, euro yen is bullish. You can check out the where I uploaded it, the weekly forecast yesterday. Yes, from yesterday, and I covered this pair there. So euro yen is one of them. Euro franc also continues the bullish pressure, aiming the 50% of the triple cycle. Again, it will not be in the report for one reason, not to overexpose. But for those of you who are interested, my personal view that we are going to the 50% of the triple cycle. Okay. Next, pounds. So as for the pounds, we have 2. Euro pound, one of them, which we also already covered, and the pound versus the kiwi. So our plan with the pound kiwi was buy retraces. We got these retraces in 2 waves. Bullish divergence formed, and from the previous week, we are bullish. And that's all. I have nothing else here that I see. Nothing changed. Everything remains pretty much the same. The good part is that the lower time frame now also creates a bullish structure here. Not classical, but it's bullish structure. Higher highs, higher lows in play. So I would expect the euro pound to continue higher until we would create here some divergence. So the view was and remains bullish. I have not much more to say here, and that's pretty much it. Expectations are further. The buys from that were activated from previous week still remain bullish. Now it's 100 plus pips move, which look tiny for a pair like pound kiwi, right? And that's one of the wonders of the pound versus the kiwi. Now, can this pair first of all retrace from here and do enlarged correction? The answer is yes. Can we expect it or predict it? The answer is no. It doesn't have a bearish structure of three lower highs, 3 lower lows. So technically, it shouldn't do that. Technically, it might make the correction and continue here within the respect of the previous low. Mr. Market is Mr. Market. We can't predict, right? So as for now, due to the fact that the weekly direction is bullish of the triple double structure and the breakout, we expect a continuation. No signs against on the weekly. Daily is a bullish structure and no signs against. So the expectations are further. That's why I'm saying currently the facts are bullish. There is no reason to expect the market will decide to do anything else. It could, for one reason, because the retrace here is pretty small of this trending structure. But again, when there are no signs, there is no need of develop these signs, right? Let's give the market the chance to talk, and as for now, it talks in the bullish language. So that's for the pounds. I would not expose more than that. You know, the sensitivity around the pounds and all the expected things by the end of October. I think it's more than enough. Pacifics and the dollars. So let's start with the Australians. Where are Australians? Here. Aussie franc. Our bullish view comes from the weekly cycle with the bullish divergence in at the end. And we expect corrective cycle, right? So the daily, which formed the first leg, expected to continue and make the second, and that's why the view remains bullish. 4-hour chart fits in with making the higher highs, higher lows, and 2 deep waves. And after this breakout, we are bullish. Then we had another opportunity with these 2 waves breakout and the bullish hidden divergence. And the previous week, we discussed about partial cash out right here when divergence was developed against. This divergence is still in play, by the way. Okay, so if you still didn't cash out partial with this divergence continuing, it's good to put some profits in the pocket. Moreover, the expectations are still bullish. Nothing against on the weekly and the daily. We could face any retraces, but the direction is to the upside. Australian versus the dollar. Another pair we are looking for the buys. What do we have on this pair? Bullish divergence from the weekly chart and bullish expectations. Daily. Also, bullish divergence is the last divergence in play. So our expectations are further, rallying further. 4-hour chart gave us the structure, higher highs, higher lows. We want to see retraces and buys. I still think we can face anything like that for clearer divergence here, of course. Right? We will see if that's what the market develops. Alternatively, if we start to create a clear structure of the higher highs, higher lows, then no need to go lower, just expecting it to continue all the way higher. So the view was and remains bullish, expecting that to maintain the bullish pressure from the weekly cycle. And Australian versus the Kiwi is our next one. A tricky move by this pair. Previous week, by breaking this trend line, it gave the idea of a triple double structure here with expanded movement towards 38 down to 50% of the daily cycle. However, with the breakout, a bullish divergence was immediately coming in play. This is a contradiction between the daily cycle that should correct towards 38 or 50 and from the lower time frame, which now simply made expanded correction with a bullish divergence. And each of the legs, it's a cycle by itself, here, here, and here. So look at the beautiful and interesting structure. This move down was three lower highs, 3 lower lows with 2 waves correction. Contradiction to the daily direction, right? If this trend line breaks down, we expect the move lower. But the trend line was never breaking down, therefore this became irrelevant trading structure. Alternatively, it goes all the way high by creating higher highs, higher lows by itself. 3 higher highs, 3 higher lows. Changing immediately back to the bullish expectations from the daily. So daily last divergence is bullish. 4-hour last divergence is bullish. Pardon. The trend line is trying to break out. The RSI trend line is breaking as well parallel to gain the momentum, to verify the momentum, crossing above the 50. 4-hour chart, again, last divergence is bullish and rallying straight. No divergences at the end. And the 1 hour is the one that contributes its beautiful verification of the higher highs, higher lows. The expectations are back to the longer term bullish. The sell idea that we had previous week with this short term becomes irrelevant, never triggered, never interesting anymore as for now. That's why it's removed and we are back to the main cycle. What is the main cycle? Remember the longer term view? We are in special cycle here. We can continue and dance inside this range and climb higher, or finally start the 2 waves correction of this cycle. How exactly the market will work, we don't know, but we do know that the current momentum is bullish. Last divergence that is in play, it's bullish from the weekly. Now we create higher highs without any divergence against. Our plan remains bullish. That's pretty much it. Questions, guys, before I continue to the next pairs? Are there any questions? If yes, please ask now. Everything very clear? Good. Thank you, Tibor. I always, it's always two sides for any medal, right? If I explain and there are no questions, it could be either it's everything clear or I scared everyone. Well done. So we will see. We will see. I hope everything is clear. And the joke aside, guys, as always, if you have any question, please do not hesitate. I'm available in the Telegram groups. Use it. If not me, any one of the experienced guys would be there for you. That's why we have these groups for. Do not digest the information by yourself and try to work through the steps that you have doubts about. It's not good. If you have doubts, clean them, ask, discuss, share your chart, ask on your chart. That's the way to learn. If you will try to guess by yourself what's the right thing to do at what situations, you will always have this gap between the understanding to the real steps of the technical view. Okay, use the platforms you have, guys. We're there for you. All right, so let's continue. The New Zealandians and then the other of dollar pairs. New Zealand dollar is the one that we are trading. Triple cycle from the weekly bullish divergence in play, expecting corrective cycle. Daily, a concern. Why daily is a concern? Because from one side is bullish divergence, no opposite divergence at the rally. But look at this structure that it's possible creating here. That means if we break below, and I repeat, if we break below the rising trend line, it is an invalidation. And in that case, we remove it from the list. As long as it didn't, our assumption that we are building up here a bullish structure to correct the weekly cycle. And that's how we trade it as for now. The last push on the 4-hour chart topped with this resistance zone, and right now we are in the corrective cycle. Two waves in play. Bullish hidden divergence hints for possible trend continuation. This is the most recent trend line. Break above that should open the doors for further rally to take place. And here comes the question, like with the euro dollar that we discussed at the beginning. Can we trade this bullish hidden divergence by itself? The answer is divergence just hints what's going to happen. If you want to squeeze lower, no problem. But verify your trend change. False breaks higher highs, bullish convergence, 3 higher highs, 3 higher lows. Let the bulls return. Do not try to guess where they will return, and will they. Not that it's bad, because if you catch the bottom and it flies, then you are one among those who catch the bottoms. But you know the statistics. The chances are against you in such case, right? The chances are against you. That's always why try to trade facts. As good as the level is, and as great as divergence signs are, it's still not an appearance of the buyers or the sellers, and it's important to remember that. Okay, guys? Again, not that it's bad, it's just more aggressive, and because of its nature, the chances to end up with a loss in such case are just bigger. And not everyone is able to deal with some losses. Most traders after 1 or 2 losses give up, and then the pair continues in the direction that they expected, right? That's what happens normally. In order to avoid it, if you have a hard time to deal with a loss or two, just try to do the better timing. And better timing comes with a clear setup, less with trying to guess where the bottom or the top will be created. Okay, so the New Zealand dollar is our direct exposure to the New Zealandans. We also have 3 others: Aussie Kiwi, Euro Kiwi, Pound Kiwi. So more than enough with the New Zealandans in general. And the dollar pairs, dollar CAD, dollar yen. So let's start with the dollar yen. Our expectations were previous week buy retraces. Here is the setup we managed to get here. Both false breakout with a bullish divergence and trendline breakout. Why are we still bullish? Because of the weekly double cycle. We anticipated the 38.2. We're getting very, very close there, and a bearish hidden divergence potentially to be created. Daily chart supports our view by making the higher highs, higher low structure from before, then the 2 waves, and now the second leg that it is developing. Once we end up on a divergence here, and the 4-hour chart makes the divergence, which likely to happen soon, it would be a good place to do what? Cash out. Should we go and sell here? No. Why? Again, we're not trying to catch the top. we will let the market speak. And how it will speak, if it will, well, actually that's 2 candles in play, yes. If it will make the false breakout and convergence, that's a turnaround. If it will make 3 lower highs, 3 lower lows, that's a turnaround. Until then, it's just a wish. So the only thing we will do is, if the daily and the 4-hour chart would both tick bearish divergences, it would be game over for the bullish view. Until then, the view is bullish. Just remember managing, right? That means if 4-hour chart ticks down bearish divergence, that's a good place for partial. If the daily ticks bearish as well, then it's a good time to get out. When 2 time frames are against the main cycle, it's time to step back and go neutral. And the last one of the dollars is the dollar versus the Canadian. Weekly is a triple cycle. We expect it to take us to the 50%. No signs against. Daily last divergence was bearish. No signs against. 4-hour chart is making some sounds of possible reversal by slowing down. And the level of the psychological round number 130 is coming very, very close. This divergence should take place. We expect a retrace and sell. How can we trade this retrace, and when will we trade this retrace? When we will get reversal signs. Like what? Like false breakouts and higher highs. For example, if this would be completed false breakout and then we create a full convergence, it's an idea to start looking for short-term buys. If it will start to create lower, higher highs, higher lows, then we can discuss about buy retraces as well. But since we do not have these facts all the way starting from the previous week, then we cannot go and trade it. Right? Very, very simple and straightforward. So the view remains bearish here. Sell the rallies is our plan, and we will trade the rallies only if the bullish reversal signs would take place. Commodities, gold and silver, gold and natural gas. Natural gas is back on the view here. So gold, I heard from many sources, everybody is only buy gold. Now, don't get me wrong, because I'm also after buy gold. The only thing is that I expect the correction to go a bit deeper first. It does not change my view. I think we are very seriously to the upside, because I believe that this was a massive structure that we gained to the upside. Then we were working here with some correction, broke it, and I believe there is much more to come in the future. The only thing here is, again, I just think that we first of all should see deeper correction according to this cycle. Of course, there is a chance I am wrong. But as long as we are holding this range, my view remains bearish, and I think sell rallies is the right thing. So even though the 4-hour chart channel was not respected previous week for the second visit, right? We got a beautiful dive here, 30 points. But it was over, because since then it was ranging and never broke this triangle, and alternatively it just broke to the upside. I don't trust it. I personally think we are continuing lower. So my view remains bearish. As per the setups, the 1-hour chart currently likely, and we don't know it yet, is creating the lower highs, lower lows. If it does, that would be an idea for the short-term traders out of you. Those of you for the longer view, then this is a bearish hidden divergence with verified 4-hour chart divergence on these two waves. So this trend line is attempting to break down. As I showed on the 1-hour chart, likely that this is going to be the structure, and that would be a good verification of sell the rallies. Again, I might be totally wrong here with my read, of course, but I personally still see that more bearish than bullish on the short term. And ideally, if we get this low with a divergence, then I would definitely be back to the bullish side. We will see how it goes. Anyway, currently I hold myself, and I expect here to see lower prices. Will that happen? The market will tell us. But currently, that's the read I have. We'll see if it's correct. And the natural gas. So what do we have here with this pair, with this commodity? Triple cycle, descending cycle, expectations of two waves, pardon, like this. Bullish divergences in play, of course. The daily chart is the one that gave us the structure, first leg in this special cycle. Then kind of two waves with bullish hidden divergence. After that, we break up and gaining the momentum. Now finally, the 4-hour chart break this high, basically verifying the higher highs, higher lows. So the expectations are for future continuation. For all those of you who are involved yet from the few weeks ago, I think 2 or 3 weeks ago, trendline breakout, just manage the position side. Nothing else to say in that situation, just riding it. So that's from the commodities. And the last one, which was triggered to the buys, is the sugar. Not healthy in general, but we are trading it to the upside. What do we have on this sugar? Triple cycle, first leg, convergence, corrections, trendline breakout. Okay, the daily chart gave the rally, broke the trendline by itself with the bullish divergence, creating the higher high structure. And this is the first leg. Assume this is the first leg. This is the correction. It's a bullish hidden divergence. And if that's the legs on the daily chart, then a 4-hour has to be a cycle. The 4-hour is view like this. That's why our plan was by the basically bullish above the break of the trend line. Trend line was broken. The view is bullish. Cryptos, we have 2 cryptos in play. Ethereum, both of them. Let's start with the Ethereum versus the Bitcoin. Special cycle. Triple cycle. Bullish divergence. Expectations for correction. First leg of the correction is a cycle by itself, or trending structure by itself on a daily. 2 waves correction in play, bullish hidden divergence developing. Break above falling trend line should bring a good bullish move. Invalidation if we suddenly break through the last low for whatever the reason is. So Ethereum versus the Bitcoin is the first one, and Ethereum dollar is another one on the list. Special cycle is in play here. Bullish divergence is in play, of course. Most recent trend line was broken. Higher highs are created, not a full convergence, but higher highs are in play, convergence principle. The long trend line is also breaking, and it's building up the first leg to the upside, as we assume that, and we expect continuation. If this is the first leg, then we should face a structure, and we do. Now, I have concern here with this little retrace, but it's crypto. Definitely not as popular in technical market as the Forex, as the euro dollar, for example, or dollar yen, right? But the structure is still to the upside with all the higher time frame views, the expectations from the Ethereum is also to the upside. Stocks, we have two. One invest the Deutsche Bank unchanged, and one other is the where is that? The buyer. Here we are. So buyer, which we are riding the buys from the bounce of the trend line and the bullish hidden divergence and the trend line breakout setup, right? Discussed about the setups. So the 4-hour chart broke this trend line while the daily was creating the bullish hidden divergence, and we are riding the buys. Partial cash out should be applied. Why? Because this is the trend line breakout time frame, and now it has some divergence against. So partial cash out should be in play. Why partial only and not fully? Because there is nothing against on the higher time frame, and our expectations are still bullish. That's why it's only partial. Okay, that's all, guys. That's the full long list for us for the beginning of the week. There are several more interesting pairs building up, which I follow, like the Kiwi CAD, like the CAD Franc, for example. We will see how they develop, and of course, adjust accordingly the list. Is there any question? If yes, that's the time. If not, as I mentioned before, I'm available for you guys in the Telegram. Feel free to ask anything you need. Just please do myself and yourself a favor. Do not try to deal with doubts by yourself. Okay? Very, very, very important. Unfortunately, that's what majority do, trying to figure out without asking the question, because everyone is afraid to ask the stupid question. But the only stupid thing to do is not to ask the question, because then you don't know the real answer. So it's up to you guys. But I mentioned not once, we are there for you. So I hope you use it. I wish you a wonderful week. Thank you very much for being here, and successful trading. I'll see you in the Telegram, guys. Ciao for now.